The Strait of Hormuz is finally open. Oil is back below $85 per barrel and going lower. Bitcoin, of course, hitting new highs right here at around $78,000. And I am personally very concerned for Bitcoin, and I think we're gonna go lower from here. And I need you to pay very good attention, because I will explain to you 4 reasons why we're gonna go lower from here. Now, first of all, the Strait of Hormuz, Iran has agreed to never close the Strait of Hormuz again. It will no longer be used as a weapon against the world. These are the words of the President of the USA. A quick look here at the Strait, a video of the first vessel that passed through the Strait. And this is good news. Oil prices will go down. The market, the S&P 500 will boom again as the Strait is closed, of course, as investors have more confidence. Now, straight into Bitcoin. First of all, there's 4 reasons why I think we're going to go lower from here. Firstly, we look at the bear flag pattern, and the bear flag is this yellow line, and we are at crucial resistance at the top side here. We were last time at crucial resistance and then went down, and right now we are again at crucial resistance, and I've marked it, guys, for you here, and I think this is a very high likelihood that we're going to go down from here. Now, second point why I think we might go down is if we look at the weekly Bitcoin chart, we can see that we have a W pattern forming, and this is usually a bullish pattern. If we break the neckline, which is right here, if we break the neckline, we go higher. If not, we don't form the W pattern and we most likely go lower. So basically, we're at a crucial point which we have to break. Thirdly, if we zoom out a bit and you focus on this big white line which I drew, it's a multi-cycle support and resistance. You can see it has previously acted as resistance here. It has acted as resistance here in the last bull market, has acted as support in the bull market, and now it's again acting as resistance. And this line of resistance actually coincides perfectly with our bear flag resistance on the top side. And finally, we can talk about the bull and bear market support bands. And I will show you guys, these are the EMA ribbons. I will go into them as well. But the bull and bear market support bands are also telling us if we are in a bull market or in a bear market. And as long as we are below these ribbons, the support bands, we are in a bear market. And let's look at history, because history does repeat. And last time we looked at the bear market, we can see that we bounced once, we bounced twice from these lines until eventually we broke to the upside and we broke these support bands and went up. The same thing is happening right now. Look at this. We got rejected once, and it looks like we are most likely going to get rejected if history repeats. Now, it does not always repeat, but it rhymes. Now, another point to note is that you might be asking, where's the end of the bear market? Well, then we can look at something called the EMA ribbons. The EMA ribbons will tell us if we might be entering a bull market or a bear market, if there's a reversal in trend. If we are above these ribbons, we're in a bull market. If we are below, we're in a bear market. And this is a lagging indicator. Now, why is it lagging? First of all, let's look at the last cycle. The last cycle, we entered a bear market right here. This was the top of the bull market. We started entering a bear market. It is, of course, not immediately confirmed. The moment we are below these EMA ribbons and we get rejected below and there's a reversal of the ribbons, you can see these lines, the yellow lines at the bottom, and it starts getting to the top. This is a reversal. Here, the yellow line was at the top, and now it is at the bottom. These are different simple moving average lines. That's not as important. What we want to see here is that we are basically below and we get rejected. We stay below, Bitcoin stays below until eventually we go up and we stay above, and then we keep getting supported from the EMA ribbons and we stay above, and that means we're in a bull market. Now look at the current time. We got rejected once and it looks like we're gonna get rejected again, unless of course we go above and then the yellow line, they will flip and we're gonna go into another bull market. Now, what will happen if Bitcoin actually breaks above $78,000? Very important. Well, I think we're gonna go to about $84,000. Why do I think that? Because we have a major CME gap at around $84,000 here. This is the gap that Bitcoin is creating over the weekend if it creates a gap in price, a price difference. And these gaps tend to be filled more often than not. For example, let's look at last weekend. We had a big gap forming here, and it was formed just a few hours, like one day after. And this is currently the price movement we're in. So if we go up, we're most likely going to fill the CME gap at 83,000 and then go down. Option 2, we go down right now. We have crucial resistance at the bear flag resistance, all the resistances that I mentioned, and we will fill these two CME gaps at the bottom, because we have two more CME gaps. One is at $70,000, and then we have another one all the way at $67,000. So these are the two options which I think can play out. Now, let's look at this amazing video, which will basically highlight what I think will happen to Bitcoin throughout the course of 2026. And I will add my commentary while we watch the video. So I think we're gonna get rejected here at $78,000, go down eventually, find the bottom of the bear market at around $50,000, trade sideways there and then go up. And eventually start the new bull run. And while we go up, of course, we're gonna go in stages. We always go in stages. We go up, then we trade sideways, and then we go up again a bit more in stages, just like we did go down in stages in the bear market. Now you might be asking, why $50,000 and when do we hit the bottom of the bear market? Well, I want to answer that for you guys. So if we look at Bitcoin, and to answer these long-term questions, I always like to zoom out a bit. You can't be looking at the 4-hourly or the daily chart and telling me what Bitcoin is doing in 3, 4, 6 months or 1 year. We want to be zooming out. So each candlestick represents 1 week. Okay. First of all, when do I think we will have the bottom? I think that is more likely to be predicted than the price, because the price could be anything, really in a big range. Like, I can't predict the price exactly, but I can approximately predict the time frame based on history. Well, look at this. The red boxes here mark the bear markets, and it marks the top of the bull market to the bottom of the bear market. So the whole downward movement, and you can see it is 364 days. The last cycle, it was also 364 days. And if history repeats again, and I did say it does not always repeat, but it rhymes, and I think it's gonna rhyme very much this time, we're going to be hitting the end of the bear market at around end of September, beginning of October. The exact day, if we follow 364 days, will be October 5th. And now at what price do we hit the bottom? Well, that's debatable, but I think it's going to be approximately $50,000. First of all, $50,000 is a nice psychological number. People usually like to set buy and sell orders at nice round numbers, 50,000, 40,000, 45,000, even in the thousands. Like, when I put a sell order, I might say, okay, I want to sell at 77,000, 78,000. I'm not going to say I will sell at 72.2, for example. It's just how people think. It's nice numbers. They want to lock in profits at these numbers. That is one reason. Now, why 50,000? Because it has previously acted as, resistance here, a resistance here. It has acted as also support, and therefore I think it lies within our range. Usually we have always higher lows. So for example, in the last time we hit the bottom of the bear market, it was around $16,000, and now this time it will be higher. The last top of the bull market was $69,000, if you remember, and now the top was $126,000. So we have always higher tops and we have higher lows also. Now, that is it. The last thing I want to mention is that central banks right now own the most gold this century. Not the most gold they have always ever owned, but in this century we had all-time highs for central bank gold reserves. Now, why is this concerning? Well, this is because we have very high inflation. We know that inflation is right now at approximately 3.3%, and with the oil, being restricted, and a lot of money printing going on, and Trump wanting to lower interest rates further, we know that inflation will go higher. This means that your fiat money, your euros, your dollars will lose value, will lose purchasing power. And what does not lose purchasing power is real assets. Real assets like gold, like real estate, and of course like Bitcoin are assets that you should be holding. And if central banks, the institutions that print money through electronic systems, if they rather hold gold than cash, this should be concerning, and tell you guys that you should also be holding these assets, because if you just hold cash, you're going to be losing money through the purchasing power loss of your fiat currency. And therefore we can see right now gold is hitting all-time highs, And of course, Bitcoin is going to go back up. Real estate is booming. The whole market is booming because people want to buy assets rather than hold cash. Hope you guys enjoyed the video, and I see you guys tomorrow. Bye.